Good morning, everyone. Good morning, good morning, good morning. Hello, and welcome back to another live stream. How's everybody doing today? How's everybody's week going so far? Good morning, good morning, good morning, or good day, depending on where you're from. Hope everybody's week is going well. Hope everybody's day is going well. Let's see who we have here today. Good morning, Jazz. Good morning, Alexis. Good morning, Raj. Good morning, Furkan. Good morning, John. Good morning, Christina. Good morning, Alive. Good morning, Tatiana. Good morning, HMH. Good morning, Makio. Good morning, Jackson. Good morning, Trader Kyra. Good morning, Thunder. Good morning, Prakar. Good morning, Eni. Good morning, S Trades. Good morning, Joris. Good morning, It's Nay. Good morning, Derek. Good morning, Uturo. How's everybody's week going so far? How's everybody's day going so far? Good morning, Eos. Tomaso, what's up? How are you doing today? Good morning, Jericho. Good morning, Peter. Good morning, Vis. Good morning, Aobami. Good morning, Catalin. Good morning, Umar. Good morning, Medi. Bimel, what's up? Ubong, good morning. Amir, good morning. How's everybody's week going so far? Good morning, Jugal. Good morning, Mark. Good morning, Rajesh. Good morning, Dali. Good morning, Blaze. Good morning, Jackie. Good morning, Tasha. 47 Trades, good morning. Vipel, good morning. T, good morning. Rav, good morning. June 30 Trades, good morning. Zabir, good morning. Kyrie, how you doing today? Amald, good morning. Travan, good morning. Hello, hello, hello. Hope everybody's week is going well. Hope everybody's day is going well. Another chance to gain some more conviction in our model. We have a few different things that we'll be talking about today. We're just giving some time for people to join before we get into the conversation. Good morning, good morning, good morning. Good morning, Ivan. Good morning, Sahib. Good morning, IPF. Good morning, John. Good morning, Jack. Good morning, Zicky. Good morning, Moses. Good morning, Mr. Anas. Good morning, Kings. Good morning, Livy. Good morning, Sylvester. Good morning, Hazi. Hello, hello, hello. Hope everybody's day is going well. Hope everybody's week is going well. Good morning, Leonard. Good morning, Hemya. Good morning, Andrew. How's everybody doing today? Good morning, good morning, good morning, or good day, depending on where you're from. So there's a few things that I want to talk about today. There's a couple different topics. You can probably see the different tabs that are open on my computer. Those are going to be some of the topics that we talk about. The first thing that I want to get into is the Unicorn Model Rating Guide. Continue to keep putting out free PDFs, trying to define and document the entire model to the best of my ability. That way everybody can see exactly what I'm looking at as we're going through these live streams. Okay, so the entire model has been documented via the YouTube live streams, the YouTube playlist, the free PDFs, along with the Discord where we document examples every single day. you want to grab this PDF as we're going through it here this morning, here's the link to it over here. I posted it on Twitter so the entire community could get it. Free unicorn rating guide. This is where you can get the PDF. Completely free. Just like the majority of the work that I complete. I'll continue to keep documenting my entire business publicly. That way everybody can see how I engage with the marketplace. Let's go through the guide so everybody understands what we're looking at here. Once again, if you want to follow along, either go to the Twitter, get the link to the guide. I believe the guide is also in the link of the description of this live stream. So if you click on the description right below the live stream, you should see the link there as well. Purpose of the guide is to show you different probabilities, right, through letter grading. Before we get into the different setups, you have to understand something. You have to understand that probabilities in the marketplace, there's a random distribution of them. Okay, and what I mean by that is an A+ setup can fail, an A+ setup can win. A B+ setup can fail, a B+ setup can win. A C+ setup can fail, a C+ setup can win. It's a random distribution of probabilities. Okay, and this is why we use risk management. Risk management is the #1 priority at all times because it does not matter what probabilities you're dealing with, it can fail. Let me give you an example for anybody that plays cards, okay? If anybody understands the game blackjack, let's talk about probabilities in blackjack real quick. Just to give you a different kind of perspective, but the same exact conversation. All right, now let's imagine that the dealer deals you 2 kings, right? So you have 20. That's a high probability hand. That's a strong hand. Now let's imagine that the dealer, the up card for the dealer is a 6, right? So that's a weak hand for the dealer, and that's a strong hand for you. That would be a higher probability hand for yourself. So you have a better chance of winning. Okay? Dealer flips over its down card, it's a 5. And now all of a sudden the dealer has an 11. Dealer takes one more card and it's a 10. Now the dealer has 21 and you have 20 and you lose. The entire purpose of the conversation is to show that it doesn't matter if you have a strong hand, you can still lose. That probabilities are just probabilities. Doesn't matter if you have probabilities in your favor, it can still lose. Yes, obviously, as a risk manager, you'd rather bet on higher probability situations. But you have to understand that an A+ setup can win, a B+ setup can win, a C+ setup can win. Just like they can all fail. So, it always is going to come back to risk management. Okay, risk management is the #1 priority at all times. We'll talk more about risk management in the second portion of this live stream. Let's start to go through the rating guide to show the difference in probabilities here. Okay, so this is what rates each setup. Okay. Time is our most important element. We should always be participating during the opening times. It doesn't matter what opening time that you participate in. The model can work in any of the sessions. Just make sure you're participating in one of the sessions. Asia Open, London Open, New York Open. Time is the most important element. The second most important element, draw on liquidity. Equal highs and equal lows are one of our best forms of draw on liquidity. If your entry function does not have anything to reach for, then you're dealing with lower probabilities. For example, you want to see equal highs as a target. And when dealing with equal highs, you always want the right side to be a failure swing. Same thing with equal lows. You always want the right side to be the failure swing. Okay, we want to use equal highs and equal lows when we get into a position. Next is the entry function, right? Everybody understands what a breaker block and an FVG is at this point. But is your breaker block clear, clean, and decisive, right? Is the displacement through the breaker, is it very energetic? Is it very decisive? Right? How clean is the setup, right? How many candles did it take to create the setup? If your setup took 10 or more candles, it's not as clean as 10 or less candles. Yes, I just handed out a key there, so hopefully everybody is following along. Higher time frame point of interest. We want to be basing all of our decisions off of a higher time frame level. If you're not using higher time frame levels, you're dealing with lower probabilities. The higher time frame levels I use are swing lows, swing highs, and FVGs. Right? If you're bullish, then you should be looking for a bullish entry function from an hourly bullish FVG, right? And a higher time frame key level. Lastly is SMT. Personally, I'd rather use higher time frame SMT, right? Because the lower time frame, if you were to use lower time frame SMT, that's where you need your entry function. Right, so the hourly chart taps into an hourly FVG. When it taps into the hourly FVG, you see that there's bullish SMT at the lows. That sounds like a higher probable opportunity. Okay, so get a copy of the list. That way you can print it out and check it off each time. Right? If you have all of these checked off every single time, that's an A setup. Okay? Once you start missing some of these, that's when the probabilities go down. Right? If you're missing 2 of these, I would consider that a B setup. If you're missing 2 or more of these, I would consider that a C setup. Right, and I'm not going to go through it here, but that's the same exact thing that I just stated. Talking about the different ratings now. Right, all criteria are fully met. That would be an A+ setup. All criteria except for SMT, we're still dealing with an A setup. Okay, the moment you start missing more than 2 of those things, right, missing both SMT and a higher time frame point of interest, then we're talking about B setups. Okay, so if you can't check off all of them, then do you want to participate in the entry function? That's where you have to become an independent thinker and understand if you're going to even allow yourself lower probability setups. and C setups, in my opinion, not even worth taking, right? If the criteria isn't met, you're dealing with very low probability. And in my opinion, at that point, you should just stay on the sidelines. Okay. Couple examples of that. Right? Higher time frame point of interest is the bearish FEG. At the bearish FEG, you can see that there was bearish SMT. Then you go down to the lower time frame. Right? Here's the bearish FEG here. Here's the SMT here. Notice how the weaker pair is being used because the failure swing here from the SMT, showing the weaker pair for a short setup, is being used, and a very clear entry function. Swing high, swing low, new high, new low. Count the amount of candles. 1, 2, 3, 4, 5, 6, 7, 8. It's a very decisive entry function. Makes sense that it gives a couple entries in here and then runs to the target of the draw on liquidity. All right, so that would be considered an A setup. As you can see, it checks off all the boxes. 1, 2, 3, 4, 5. Examples of a B setup. Notice the time, right? Hence why it's a B setup. Time is the most important element. And then it didn't have SMT either, right? So the moment you can't check off everything, you're dealing with lower probabilities. But also notice something. Notice how this one was executed. Right, see the execution labels? I did in fact execute this. Right, so it's not that you can't take lower probability opportunities, because the reality of the scenario is both of them were winners, right? This one gave an entry and then ran to the target. This one gave an entry, then ran to the target. So it's not that lower probability can't play out, because it can. But you as an independent thinker have to decide whether you're willing to take lower probabilities. And then lastly, the C setup, right? The only thing this has here is an entry function. There was no higher time frame level. It was outside of the hunting hours. Okay, this doesn't check off anything other than the entry function. But once again, notice how it does provide an entry and it runs to the target. There's a purpose to me showing that. It's that it doesn't matter what probabilities you're dealing with. What matters is risk management. What matters is risk management. Okay, so we're going to get into the risk management conversation for the second portion of this live stream. And we're going to do that through defined data. Okay. For anybody that's not familiar with this is TradeZella. Currently running a giveaway for TradeZella right here. Again, on the Twitter page. We're giving away 3 1-month free accounts of TradeZella. If you feel like participating in that, go to the Twitter page, complete the following. If you want to hop right on an account, code ASH will get you 20% off of your TradeZella accounts. TradeZella is pretty phenomenal, in my opinion. It's a tracking tool, right? So it's your journal. The amount of statistics that it provides is phenomenal, along with the back testing that you can do on it, right? And here's one of the back tests that I completed. I specifically completed this back test for this conversation, right? And it did really well. This is using one contract of NQ. risking $500 per position. And this is where I'm going to get into the risk management conversation, because notice what's going on here. 36% win rate. 36% win rate. But we're plus $18,000. Why is that? Because of this right here. Win to loss ratio. Notice the average win is over $1,000. Notice that the losses are below 500. You all have to understand that risk management is the #1 priority in this business. Risk management is going to be the reason that you either make it or break it. Risk management is going to be the reason why you make it or break it. Let's take a look at a couple things, so I can explain that more. All right, so this is a pretty decent back test here. 235 trades. All right, so a good amount of data. Not enough, but a good amount of data. This was for the year of 2024. See how many months that was. So we made it into... All right, so we've made it into the last month. So almost 12 months of data. We can finish this last month here on live stream if we want. Almost 12 months of data. Now just think about this. Throw a 1 in chat if $18,125 of profit is worth 12 months of work. Throw a 1 in chat if you believe it is. Throw a 2 in chat if it is not. $18,125 for 12 months of work. Okay, now here's the second question for you. Yes, it is a loaded question. Zicky knew this was coming. It was a loaded question because the reality of the scenario is the money is made through compounding, right? So since we're all, using these prop firms, what if you had 20 accounts of Apex, right? So now you're talking about 20 times 18,125. How much money is that? How much money is that? Is $362,000 worth 12 months of work now? Is that enough? Over $250,000 in 1 year? Problem is you have to start somewhere, right? You have to be profitable. You have to have a system that has positive expectancy to even get to that point. You won't even get to the point of compounding if you don't have defined risk management. Positive expectancy. Look at this chart. Gradually going higher. Yes, it goes up and down, but it continues to see new equity highs. Positive expectancy. You have to understand how to manage your risk to even get to that point. That's what I'm trying to get at here, is that it's a matter of understanding how to manage your risk. Because when you can manage your risk, that's when you start compounding. When you have a system that you can specifically say over the long term that it provides profits, that's when you start adding more accounts. That's when you go and get 20 Apex accounts. Because now 20 times $18,000, I don't think anybody's saying no to. But it starts in the beginning. It starts with this right here. It starts with this right here, right? So now I'm going to jump into some different questions, still regarding risk management. Okay. First of all, let's just go through the trades and notice how strict this risk management is. Notice that you won't see a loser that's over $500. Every single trade for the entire year, there was never a loser over $500. Look at this losing streak. This is going to be a question. Imagine going through this many losses. How many people would have blown up the account? How many people's mental would be in the garbage? How many people would have changed their system? Let's see how many losses this is. Let's count it real quick. Okay, so it stops there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 losses in a row. Throw a 1 in chat if you think after having 12 losses in a row, you would have either blown the account or changed your system or were mentally, emotionally deterred to the point where it made you do something to blow the account. Right? If people have 10 losses in a row, they're probably sitting there saying, screw it. Let's just risk it all to see if we can make it back. I'm not saying that 12 in a row is easy, but the reality of the situation is it's still profitable long term. It's still profitable long term. And in this scenario, it wouldn't have blown the account. Because the 12 loss streak occurred. Go to it. The deepest drawdown was here. The 12 loss streak occurred. What's the peak here? Not showing me the peak. 18? It was 19. Get to peak. Maybe it was 18.5. Right, so let's just imagine a Apex 250K account, right? The drawdown stops trailing at $6,500. Right? So even if you had a 12 loss streak, right? So 18 and then it brought us all the way down to 10. Right? So we lost $8,000 during that 12 loss streak. You would still be above the trailing threshold. You would not have blown the account. And then guess what? Guess what? Of course, right after that 12 loss streak, you end up seeing a new equity high. $19,000. So right on the other side of that loss streak is a new equity high. But you would only get there if you kept your mental. You would only get there if you kept your system. You would only get there if you kept your risk management. The amount of people that would have blown an account after 12 losses in a row is probably the majority of people. Now, the next thing that I want to talk about is this right here. For all the people that are telling you that you need a 80% win rate, 90% win rate, I highly suggest you stop listening to them. This is a 36% win rate, and you're looking at plus $18,000. You have to realize that it's about risk to reward, not about win rate. If you can have more than a 2R risk to reward, all you need to have is about a 30% win rate to be profitable. You don't need to be amazing. Put it this way. For anybody that likes to watch baseball, what is a normal batting average in the major leagues? For professionals, people that get paid millions and millions and millions of dollars a year. What's a normal batting average for somebody that gets paid millions of dollars a year? Yeah, in the 200s. So 0.20, 0.250. So 1 out of every 4 times they're getting a base hit. They are losing majority of the time. 3 out of 4 times they get it wrong. Do you think that they just quit their career? Do you think at that point they just change everything? They just say, screw it, it's not working? Point being is trying to strive for like an 80% win rate doesn't make sense. Yes, it's good to want to be better. It's good to try to consistently get better. But what I'm trying to say is when you have a 40% win rate, stop feeling so emotionally deterred that it makes you change something. Stop thinking that you're not good enough. Stop allowing emotions to deter you from your goals. Right? Imagine that MLB batter, he went on a 12-loss streak like we saw here. You think he just quit his career? He's just, screw it. Well, this next at bat, if I don't get a hit, I'm done. No. Be a professional about it. That's what I'm trying to get at here. Now, the next thing that I want to talk about before we just run through some examples on the chart is notice all the winners. Majority of winners are much larger than the losers, right? 3R here. That's like 5 or 6R there. 5 or 6R there. Massive loss streak. That's 1R. 4R. 5 or 6R. 2R. 2R. 4R. 4R. You have to be overly patient with your winners. If you cannot allow your winners to win, then you will never get this average R. You have to be insanely impatient with your losers, right? You have to control the downside while allowing no capacity to the upside. You have to let your winners win. Be extremely impatient with your losers. Make sure your downside is definitive. It's defined. It cannot be more than 500, right? As you can see, all of the losers here. It cannot be more than 500. While the upside could be 3,500, could be 2,000, right? Don't put a cap on the upside. Put a cap on the downside. 3,500 was probably the best trade if I had to guess. Large win. 3,000 there. That's a nice one. 2,000. This is all with one contract, by the way. $2,000. Yeah, so 3,500 was the largest winner. So again, every single loss there, only $500. Okay. Go into it. We'll do a couple trades ourselves because this is the last topic that I wanted to talk about regarding this information. Last topic that I wanted to talk about this information is that it doesn't matter what model you're using. Okay, so I'm going to show you a 15-minute opening range breakout. I'm specifically showing you a different model for the sole fact that I'm trying to show you it does not matter what model you trade. Because for some reason on social media, everybody likes to think that they have the best model. They have the secret sauce. You know, I'll show you how to turn $100 into $1 million using this special model. I'm here to tell you that it doesn't matter what model you trade. The only thing that matters is risk management. Right? We could trade opening range breakouts. They could work. They could fail. We could trade unicorn models. It could work. It could fail. It doesn't matter what model you trade. What does matter is that your risk management is defined. Everything comes down to risk management. That's the entire purpose of this conversation. No, I'm not changing my model. I'm only doing this for this conversation specifically. I will not be changing my model. I'm just talking about this conversation. Trying to prove a point that it does not matter what model you trade. The only thing that matters is your risk management. Okay? Stop trying to look for the new best thing. Stop trying to listen to other people saying that they know better than you. Okay? Start managing your risk. Start collecting the data on your model so you know your largest losing streaks. Right? Once you start knowing your risk management, you're going to be so much better off. Stop trying to go searching for the new shiniest object. Start trying to manage your risk. So this entire backtest, all I did was use one contract. I used the 15-minute opening range. Every time a 5-minute candle closed outside of the opening range, that was the entry, right? 5-minute opening range, or 15-minute opening range, sorry. A 5-minute candle closed below the 15-minute opening range, so I entered a short. Every single time I entered, I used the same amount of contracts, one contract. Every single time I entered, I used $500 of risk. Every single time I executed, any time that the position moved 1R in my favor, I moved the stop loss 1R. Right, so we'll see if we move 1R here. Nope, that ended up being a stop loss. Right, and I don't care that it's a stop loss because the only thing that I care about is risk management. Right, the only thing that I care about is that I do the same model every single time with the same risk every single time with the same management every single time, right? So it moved 1R in my favor, right? I'm risking $500. So since it moved 1R in my favor, I'm going to move the stop loss 1R. Let's see if it moves to $1,000. Nope, that was a break-even trade. Right, so I did the same exact management, the same exact risk every single time. The same exact entry every single time. If you're changing the variables to your model, then you're never going to have defined data. Right? If you do something different during one trade compared to the other trades, then you're not going to have defined data. You won't know if the model works properly. You have to do the same thing every time. And that's why I wrote this tweet yesterday. Same model, same risk, same management. Stop overcomplicating it. All you have to do is the same thing every time. Stop thinking that you need to change something. Stop thinking that you should change your size. Stop thinking that your model needs something new, something needs to be fixed, and start focusing on your risk management. Bankroll management is going to be the reason why you make progress or you don't make progress. That's what you should be focused on. Bankroll management. Stop trying to find the newest, shiniest object. So hopefully today's conversation proves some points. I specifically wanted to show you probabilities with the unicorn model trading guide. The rating guide, sorry. And then I also wanted to talk about risk management. Right, so see how I'm moving the stop loss 1R every time I gain an R. The execution of the risk has been exactly the same every time I executed it. What matters is that you know how to risk. That's the point here. No, I'm not changing my model. I'm just trying to talk about risk management. Trying to show you probabilities with the rating guide in the beginning. And then I was trying to show you risk management during this portion of the conversation. So I'm going to finish up the back test. If anybody has any questions regarding the conversation today, feel free to throw it in chat. I purposely was not looking at live data because it's non-farm payroll week. I don't participate Wednesday to Friday of non-farm payroll week. So that's why I was happy to have these other conversations. Like I said, we have the giveaway for TradeZello going on right now on Twitter. So if you feel like trying to obtain a free account, participate in that giveaway. If you need the unicorn model rating guide, that's in the description of this video, or it's on the tweet that I showed you on Twitter. Just really hope that the risk management conversation sticks, because that is going to be the reason that you make it or break it in this business. That is the #1 priority in trading. Yo, Ash, want to talk about the continuation into the daily FEG? Did it got bought up? Oh, nice. Very nice. Unfortunate. They just left without. Right, there's the model right there. Unfortunate that they just took off without providing an entry. Unfortunate. How do I know it's non-farm payroll week? Go to the economic calendar. Should always be checking your economic calendar. Non-farm payroll is always the first week of every single month. Right, so the private sector non-farm payroll is right here on Wednesdays. And then the public sector non-farm payroll is 8:30 a.m. on Fridays. The first week of every month, so easy to know that this week was non-farm payroll. I don't participate on Wednesday to Friday of non-farm payroll week. Ash, I would also add 1 hour change in the state of delivery on the market structure as one of the criteria for the unicorn. I don't agree with that. If you would like to do that for your own model, be my guest. That is not something that I do. I prefer to look for reversals, right? So think about reversals. The lower time frame unicorn is going to be the higher time frame change in the state of delivery. So that is why I don't add that as one of my criteria. How do you handle a stop loss that is bigger with a breaker that is bigger than $500? Position size. Position size. Go down to the micros. Get off the minis. Go smaller position size. Hanger trade here. This one ran. Jeez. There's 5R now. Still running. Doesn't want to stop. And that's where risk management comes in right there. You have a couple $500 losses, and then you have a $3,000 win. That is the power of risk management right there. I'm finishing up the backtest, so I'm not talking about yesterday's trade. Conversation today was regarding the rating guide and risk management. I'm not looking to look at the charts today. As I mentioned, non-farm payrolls this week. I'm not looking to participate in non-farm payroll. What's the difference between a mitigation block and a breaker block? Here it is right here. Right, so we're looking at longs. This would be a breaker block right here. It has a swing low, it has a swing high, it has a new low, then a new high. A mitigation block never takes out the liquidity. Puts in a failure swing and then goes higher. So see the difference? One takes out the low, one does not. This one is a mitigation block, the one on the right. Is that a reversal on NQ? I'm not looking at the charts right now. I won't be looking at the charts during this session. If you want to talk about risk management, if you want to talk about the rating guide, be my guest. I'm going to finish up the rest of this back test. Will you be expediting accounts on NFP? I currently have my accounts, so I don't have a need to expedite accounts. But NFP is an opportunity to expedite accounts. For anybody that doesn't know what we're talking about, just go on the YouTube channel, check out the conversation I had with Day Trading Realtor in the Ash Chats section. That's how we one shot, one kill evals. Friday he'll be live. Perfect. Yep. So we've been doing it live as well. If you guys haven't gone to Day Trading Realtor's YouTube, we've been doing the OSOC live on his YouTube. You'll see in the announcement section that I post the link when he does go live. So if you don't know where his YouTube is, then just check the announcement section in the Discord. Oh, wow. Hanger off the rip. Wow, and they bought it right back up. What a move. Everybody asking about the charts right now. Sorry, I'm not going to answer them. Like I said, I'm currently back testing. I have no interest in the charts right now. I won't be looking at the charts today. This is the chart that I'm looking at. Collecting data. Is there a place where we can download the guide without supporting Musk? Don't want to support Musk, huh? The bento link. He just sent you the bento link. You have to understand, if you're looking to one shot, one kill, you have to understand that you're willing to take the risk, right? The amount of the eval, right? If you have to understand that you're literally burning that money. Okay. The second thing that you have to understand is, if you do pass it, you have to be willing to pay the activation fee. So, let alone burning money, you have to be willing to spend more money. Lastly is, if you don't have a model that you've already proven profitability with, I would suggest learning, right? You don't stop trying to get into a funded account as quickly as possible, right? Once you have proven data showing that you can execute a model, execute your risk management, then maybe think about one shot, one kill. But if you go to one shot, one kill, and then right after that you blow the account because you don't know how to trade a model, then what's the point? Like, put your education first is what I'm getting at here. It's not for everyone. All right, let's take a look. This is 1 year's worth of data. $18,000. That's incredible. Year ended there. Like, probably pretty much break even for the month of December. 1.5 break even. Oh, actually nice. Green on the month of December. 2.5. Nice. Years worth of data here. So who's even putting in enough time to collect a year's worth of data? Who has gone through 256 trades? How many people can honestly say that they've backtested that much to collect that much data? Yet everybody wants to get right into a funded account. Everybody wants to instantly make money, yet they don't want to put in the time to collect the data. Right? So, like, for example, now that I know this data, I know that the worst losing streak is a 12 loss streak. Okay? The worst losing streak is a 12 loss streak. All of my losses are at $500. So that means the largest drawdown was $6,000. Who understands what that means? If your largest drawdown is $6,000, what type of account should we be going with then? What type of account should we be going with if our largest drawdown is $6,000? That means you got to minimally be going with the 250K or better, right? The 250K on Apex, the drawdown is $6,500. So that means you pass the eval, right? Because there you go. That's more than the profit target. That also means you make it to payout, right? So if you are in a funded account, right? Again, imagine if you had 20 funded accounts and you made it to payout. There's just so much to learn from data, yet nobody's putting the time in to collect it. So personally, I'll be spending a lot more time on TradeZilla. I'm very happy that I finally got here. People aren't really enjoying the Discord as much as I thought they were. Right? They just want the information spoon-fed to them. They don't want to scroll through my analysis section. The Discord's still going to be where I hang out and spend all of my time because that is my journal. But I'm going to now also participate with TradeZilla. Okay, so I'm going to wrap up the stream there. I got through the conversations I wanted to today. Once again, Unicorn rating guide right here. Check the link in the description of this video. TradeZilla, we're running the giveaway. If you want to participate in the TradeZilla giveaway, head over to the Twitter. Do me a favor, like the video, sub to the channel. We continue to do this every single week. We're going to continue to relentlessly keep working and learning until we get to where we want to be. If it provides value for you, sub to the channel so you can be notified for the next live stream or educational content. I really, really, really hope today's conversation hits home. Risk management is the #1 priority. Start focusing more on it. Okay, so thank you, ladies and gentlemen. I greatly appreciate all of your time today. I will see you all in the general chat of the Discord. Have a nice day, everyone.